Manara Minerals, a joint venture between Saudi Arabia's Maiden and its public investment fund, is in advanced discussions to acquire a 15 to 20% stake in First Quantum Minerals' Zambian copper and nickel assets. The potential deal, valued at between $1.5 billion and $2.2 billion, could be finalized by the end of 2024, although negotiations are still ongoing. Copper is a crucial metal for clean energy technologies such as electric vehicles and AI-driven data centers, and is said to be driving global demand, putting this acquisition in the spotlight. Both companies declined to comment on the potential sale, and so we want to ask our guest this morning, from Lusaka, Zambia, that is Caesar Chelo, who's an economist, why we are having this play out, but then without much details on it. Thank you so much, Chelo Caesar, for joining us on the show.
Thanks for having me. It's a pleasure to be here.
Of course. So what were your initial thoughts when you heard about the proposed deal between Manara Minerals and First Quantum?
Not very surprised. Unsurprising because, of course, copper is one of those critical minerals that globally has received a lot of attention. So different countries, different entities in different countries will be trying to get into these supply chains and secure a portion of these critical minerals. So not very surprising that there are these negotiations or discussions on the table between Saudi Arabia and FQM.
Between the two entities, who do you think will benefit more from the deal?
In my view, I think in the short term, it's FQM, because as I understand it, FQM had a flagship project in Panama, which the Panama government closed not very long ago. And they had taken on quite a bit of debt. So to improve cash flow, to improve the capital profile, to improve debt management, FQM needed a new capital injection. Over the long term, I think Saudi Arabia stands to benefit more because many countries are trying to secure a portion of critical minerals, like I said. So if Saudi Arabia gets into this game, even as a minority shareholder, and is able to influence the direction of trade of copper into their country and can either stockpile or add value there, then over the long term, through security of critical minerals like copper and nickel, they stand to gain significantly more from a developmental perspective.
Okay, but then if we say, there's a possibility of gaining more. Now, we've seen a 30% production surge in the Kansanshi Copper Mine in the first half of 2024. But then a few people are wondering or are concerned about why First Quantum would be considering to sell such a stake. And the valuation is around between $1.5 and $2 billion. Should investors be concerned? Is this something that we need to understand as regards the possibility of First Quantum wanting to let go of these, priced assets?
I think the $1.5 to $2 billion still puts Saudi Arabia as a significantly small minority shareholder, meaning that the asset is quite large. And I think what they're trying to do is counterbalance the losses that have been made from the closure of the Panama project that I was mentioning earlier on. So it's not surprising. It's actually a huge show of confidence in the asset that you have other investors who are waiting in the wings to pick up shares of that asset. They see it as productive. So any investor that's got the right quantum of money, that's got the right pitch, that's got the right sort of networks would want in, particularly that copper prices are projected to be bullish for the near and medium term.
Okay, so we are going to actually go on a break right now, Caesar. When we come back, we'll look at what this means for Zambia's mining sector, most especially that we have another country, Saudi Arabia, coming into play in terms of acquisition right now. Maybe that would mean something positive for it. We'll find out in a bit. You're watching Business Edge. We'll be back in a short while. All right, you're watching Business Edge on the Central Television. We have been looking at the possible acquisition of a $2 billion investment assets by a Saudi firm from Manara Minerals, and we're considering what the issues are and how that would actually help or impact the growth of the mining sector, or maybe revenue coming to the Zambian government in this like manner. And we've been talking to Caesar Chelo, who is an economist. Caesar, back to you. Now, I was saying earlier, looking at the mining sector, it has not been fantastic in terms of accruals in a couple of years now. We've seen shadowy players in the sector. Of course, that seemed to be robbing off or stealing the revenue that should come to the government. We're not really seeing, considerable amount of investments come into the sector as regards all these shoddiness. And now that we now see Saudi Arabia coming into the fore, do you think it would improve some sort of probably allocation of revenue by the time this deal is secured? Do you think it will spur further investments in the mining sector?
I think it will help to improve the cash flow in the mining sector. I think, among other things, FQM is not just interested to offset debts that were accrued elsewhere, but to also continue with its expansion programs. So FQM is one of the larger mines in Zambia, with two projects, Kansanshi and Sentinel. These are big projects, but I think they still lend themselves to expansion. And as you rightly said, in the first half of the year, there was already a quite robust performance. So with that robust performance, the takings in terms of fiscal revenue, through taxes, in terms of mineral royalties, those are the main benefits that Zambia can expect, along with things like job employment and employment creation and things like this. I think those are the main benefits. In terms of the changeover from whoever is selling off their shares of the assets to Saudi Arabia, there's very little transactional benefit that accrues to Zambia. But certainly there will be benefits in terms of a more stable mining environment, in terms of a more robust mining environment. I think other players that are waiting in the wings will gain more confidence by seeing that there are investors who are willing to come into the tune of $1.5 to $2 billion just to take a minority stake of an existing mine.
Caesar, wait a minute. You said that looking at this possible transaction taking place, that Zambia will not be benefiting much from it as much as Saudi Arabia would be benefiting. But I thought, when we have contractual agreements like this and discussions are ongoing, one would be looking at probably a 60-40 or a 50-50, whereby Zambia, in which this particular asset is domiciled, would be benefiting. We're talking about revenues coming in. So why would the regulator or the government allow a foreign partner, so to speak, or an external partner benefit more when it needs the liquidity to improve the value of this particular sector?
So as soon as the Zambian government granted a mining license to FQM, it lost the rights over the asset that was then created as the mine. So the mine is completely foreign owned. And as long as they are compliant with government regulation, with government laws, they are not beholden to sell their shares of the company to Zambia, particularly considering that Zambia already has fiscal constraints of its own due to a huge debt overhang. So when international investors, foreign direct investors are looking for partners, they tend to look outside the local or the domestic economy, which is exactly what is happening in the Zambian case. So they're not beholden to sell any part of the asset to any indigenous or local entity. That is the challenge that is faced right now in Zambia. But it's not something that would be the authorities would be able to compel the government. The authorities would be able to compel to be done by the foreign investor.
Okay.
Yeah.
Okay, now, so given copper's crucial role in the clean energy transition, how could this stake sale actually affect global copper supply and pricing? Should we expect a hike in price? Should we expect, growth in terms of what is being produced and supplied to the global markets? Will it optimize the value chain and the sector, as of course, the entire sector?
I think we have to understand that the transaction does not necessarily imply significant expansion. So it's one property that is partially changing hands, but there isn't a significant expansion plan that seems to have been announced. It's Saudi Arabia taking a stake in a mine, and then the mine house using that stake to balance out its cash flow, to manage its debts elsewhere, and so on. So if that is the case, then you do not expect there to be a significant expansion in production that can affect supply globally and therefore affect global prices.
So you mean
it's very unlikely that there will be any significant impact on global prices.
So you mean the Zambian government is actually considered about growth in the sector, just whatever amount of money that can come in to help it offset its debts? Is that what this means?
So the way the industry works is it's liberalized. So this money is actually not coming into the economy. It's money that is changing hands based on interactions between FQM, which is largely Canadian, and Saudi Arabia. So this is not money that is new coming into the country.
Wow.
For a country to accrue money afresh, you use taxes, you use non-tax revenue such as mineral royalties, and you get smart on the financial markets side. By law, all exports, the proceeds from all exports are supposed to actually come back to the country. But about 60%, 70% of copper proceeds typically end up outside the country, being externalized without coming into the country. Recently, the central bank has put in place an export tracking mechanism that will help to actually track the export proceeds and compel exporters to ensure that the money, the foreign exchange that was supposed to be earned from these transactions actually comes into the country. Then it will be up to the country to see how innovative they can be once awash with a lot of foreign currency, to see how much of that foreign currency can be used productively within the domestic economy.
Oh, okay.
Those are the innovative ways that you would get growth, development from a sector that, like mining.
Well,
you do not get from necessarily only from ownership of the asset.
Okay, I guess that actually defeats a few optimism as regards how this particular deal could pivot investments coming to the Middle East as regards the mining sector. But then we can only hope that things would have a better turnaround, so to speak. Cesar Chelo, economist, thank you so much for sharing your thoughts with us. We appreciate that.
Thank you very much for having me. Thank you.